Hello, you're watching Business Plus. The Reserve Bank of India in its upcoming monetary policy is likely to prop up interest rates once again. This is despite the banking crisis in the US, which has prompted talks that central banks globally may hit the brakes on rate hikes. According to consensus estimates of analysts all over, RBI's MPC could deliver a rate hike of 25 basis points during its meeting from 3rd of April to 6th of April in just about a couple of days from now. Now, this would take the repo rate to 6.75% from 6.5% right now. And the quantum of hikes, remember, has been about 275 basis points since May of 2022. Retail inflation in India continues to be a cause of concern. In February, the annual retail inflation came in at 6.4%, a tad lower than January's 6.5%, but remained above RBI's upper limit for the second consecutive month. Joining us right now in the newsroom with me is Karthik Malhotra. Also joining us shortly, in fact, he's here, Suman Chaudhary, Chief Analytical Officer of Equity Ratings. Gentlemen, appreciate you taking time out. I want to first begin by asking you, Karthik, since the collapse of Silicon Valley Bank, there's been talks that US Fed could pause its rate hike cycle or at least slow the pace. Now, another reason, of course, is that there has been a fall in retail inflation since September of 2021 in the US specifically at 6%. What are you making of the next course of action as far as US Fed is concerned?
Right, Shweta, thanks so much. I think very interesting question, and all eyes, as always, are going to be on the FOMC, which is slated incidentally for the 21st of March. In India, of course, we'll be on the 22nd of March by the time we see the numbers. Largely, I think the data you refer to and the predictions you refer to were as of 24 hours ago, as of yesterday. So the real understanding at that time was the fact that because of the collapse of Silicon Valley Bank and the hit that the banking sector in the US and the overall markets in the US had taken, the expectation till yesterday, in fact, was that, finally the Fed is going to calm down. The Fed is going to release its foot from the pedal. It's going to reduce the pressure and the hawkish stance that it's been taking for a while, and perhaps give a real pause to the rate hike that US has seen consecutively. And in fact, US for the longest time has been in a low interest rate cycle. And it's the first time in decades that we are seeing the kind of interest rates that we are seeing in the US. Having said that, banking stocks have recovered, and what we have seen in the US is that even overall the markets are, the spook that the investors had discovered in the market, that seems to have reduced significantly. And with markets back on the pre-SVC collapse level or almost in that range, the expectation now is that perhaps the Fed will not be as aggressive and go for a 50 basis point increase in rates as was estimated. But perhaps even a complete pause is going to be nullified. So analysts, more often than not right now, in fact, seem to be of the opinion that maybe a 25 basis points increase is what we can expect.
All right, Karthik. Suman is also with us. Suman, do you concur? There's not going to be a pause just as yet, but we are expecting some easing out as far as, US Fed rate hike cycle is concerned.
Yeah, I tend to agree with Karthik. I think the issue today is globally, not just in India. The interest rate scenario is very dynamic. The environment is very uncertain. So, things are changing very, very, very fast. So, the US the inflation rates are still on the higher side. Even after the decline, it's around 6%. The data that was released yesterday, it's 6%. So it's far above their comfort rate, which is 2%. So there is a case for continuing hike in US interest rates. But at the same point in time, you have this issue of banking sector instability rising from the failure of two banks. So these are creating complexities, and it's a difficult decision for the Fed at this point in time. Having said that, I think it is kind of expected that they will go for a modest hike at this point, and probably the upside on interest rates will be a little less than what was earlier expected as far as US is concerned. Yes.
All right, Suman. Now, back home, inflation remains a concern. Karthik, you will agree. Will the RBI continue to pursue rate hikes, or the situation in the West could be a deterrent? That is a big question that many people are asking at the moment.
Right. So again, if you look at inflation back home, while it has eased from 6.5 to marginally to 6.44, like you'd mentioned, Shweta, that it is above the RBI's threshold of 6%. Now, what the RBI really needs to do at this point, from what I understand, of course, there is going to be a little bit of modeling of our interest rates, which are likely to now come only in April. Some of it will follow the trajectory that the US Fed sets for us in its upcoming FOMC. But largely, I think what the RBI will try to do is suck out a little bit more liquidity from the market. Now, once we are in this already high interest rate cycle, a little bit of sucking out of liquidity by increasing the interest rates once again will ensure that the heat of the inflation is taken off at least moderately. Now, what does this mean? When you suck out liquidity, it's important to understand what are we trying to gain as an economy with that. So, number one, of course, demand is likely to take a little bit of hit, because with high inflation and if demand continues to be high, then obviously it's good for the economy in some sense, because people are buying more quantity at higher prices. But when you suck out liquidity, you're actually reducing the spending power of the consumers. Having said that, at the same time, the whatever you have not been able to suck out through these measures is getting churned back in the economy at slightly higher prices. So the economic impact, I think the negative economic impact will possibly not cast its shadow on the economy. But coming back to your core question, I think, yes, the RBI is going to continue to maintain its hawkish stance, and we should not rule out another interest rate hike. Of course, we are already seeing that house loans, for example, are getting costlier. So SBI, in fact, has announced a 70 basis point increase in interest rates on housing. At the same time, we will see an impact on car loans, on personal loan, on all other kind of high ticket value loans that consumers in the country would want to go in for. At the same time, if you have extra money and through the liquidity suck, if you park that in, let's say, a fixed interest deposit, a fixed deposit, you're likely to get higher rates if banks decide to pass on that advantage also to the consumer. But to answer your pointed question, I think the hawkish stance is likely to continue for at least the April run, if not even beyond that. And we are likely to see maybe another 25 basis points or so. But of course, this is speculation, and I don't have hard evidence for that. What Shaktikanta Das and the RBI Monetary Policy Committee have up their sleeve is something that they will only disclose for us in April. But yeah, I think a hawkish stance seems more likely right now.
All right. So let me come to you. There are a number of factors that are going to come into play when RBI decides to hike interest rates, if at all. All of it is conjecture at the moment, as Karthik rightly said. But there are different situations that are going to play up here. One, of course, is what's happening with the banking sector and the retail inflation numbers, which are still above RBI's upper tolerance limit. What exactly are you thinking of these factors that are going to play up? And more importantly, what are you making of the stance that RBI could be taking in its next monetary policy?
I think, the primary focus of the MPC, as we know, is to ensure that the inflation comes down sustainably. I think they are clearly looking at bringing it down below 6%, which is something that has been clearly a challenge. If you look at the inflation numbers, if, November, December, the numbers were below 6%. But again, because of food prices rising a bit, again, the numbers have come off 6%. So you had 6.52 in Jan and now 6.44, just a slight marginal decline. So essentially, the headline number very clearly is going to, in the current quarter, which RBI had actually projected 5.7% for the fourth quarter, it's likely to be around 6.3%. So much beyond the comfort level. And the more importantly, the core inflation number, which is another metric that RBI also looks at, that is sticky at more than 6%. So this concern is going to remain, and therefore I am fully in agreement that there is going to be a rate hike of, it's expected by us, of 25 basis points, because the inflation is clearly remaining a concern. It's not yet out of the window. So that's going to be the primary factor. Of course, there is another factor that RBI will also watch out for, which is the Fed stance. The Fed decision will happen on March 22nd. And if for some reason Fed decides to take a pause, I think that's going to be an important consideration in the RBI stance. But I think a 25 basis point is given. What they will do after that, I think that will partly depend on what the Fed stance is.
Right, Suman, if I can just step in and ask you to help our viewers understand, why is inflation so sticky? What glue is stuck to the inflation? Why are the numbers refusing to come down despite the stance that RBI is taking regularly?
I think, there are two parts to this. If you really see the legacy, the historical reason is, we had an unprecedented pandemic, right? Which led to severe logistical issues. Now, while the supply chain issues have got sorted to an extent, but it actually led to a problem which is very deep rooted. So there were supply issues. Then we came to as the supply issues were getting sorted out, we had a geopolitical issue. So it's pretty complex. I mean, all these factors led to an inflation which is not easily coming down. We also had a kind of food prices issue. Global food prices had gone up substantially. Now, of course, it is coming down, but we still have some issues. Even in India, cereal prices have gone up because of an expectation of a lower Rabi crop, and then probably an expectation of a weaker monsoon. Prices are not coming down. So I think the issues are, one is there is a risk of food inflation. Second, because of demand kind of just, especially urban demand is still pretty good, pretty strong. The services inflation, this is what our analysis says, services inflation continues to be high. And because of which inflation is not coming down. And I believe that it's not going to come down in a hurry. So this is something of a concern. I think it remains to be seen how RBI and the government tackles this issue. I think it's very important that the government takes some steps to bring down food inflation in a sustained manner. I think that will help RBI to take some, steps towards an easier monetary policy.
So, Suman, do you think this would have been as discussed as we are discussing today had this not been election year? Sorry, I know you're an economist, you may not want to take a political question, but does inflation being above the RBI set threshold of 6% become all the more a bigger concern in an election year or a run-up to the elections?
Absolutely. I think we all know that higher inflation is a political hot potato. Of course, on a lighter note, onion prices are at a pretty low level, so nothing to worry on the onion side.
All right. I have a question at this stage. Inflation or Mengai, as we popularly call it, one of the ways in which RBI is hoping to tackle it is by increasing rates year on year for literally since May of 2022 up till now, every monetary policy we see a hike. What more can RBI do? What more can central government do to make sure that the inflation is tamed in the months to come, Karthik?
Well, I think the RBI has precious little to do beyond tinkering with the rates. I doubt there are any other weapons in the arsenal of the RBI apart from managing rates. And of course, another aspect which, especially when you talk about fuel price inflation, becomes the currency itself. Mm-hmm. So, in addition to possibly just continuing with the rate hike and sucking out liquidity, I think keeping the rupee value in control under check is another potential weapon that RBI could use. But then again, our rupee pegged to the dollar, which was relevant up until fairly recently, a few months ago, may not be as relevant today. because our oil import is from Russia, and for Russia the dollar value is as good as a piece of paper. So, I mean, if you're settling trade bill with Russia in yuan, then our currency pegged to the dollar, I'm not sure managing it is going to yield too much of an impact. But I think Suman might be able to answer that better.
Suman?
Yeah. So I think yes, increasingly a larger proportion of imports of oil is happening from Russia, but we still have a very high dollar content in imports, and naturally, if there is depreciation in the rupee, that it's going to bring an imported inflation. But I would say RBI has done a reasonably good job. And if you see the last few months, the rupee has been broadly stable, yes, with a little bit of volatility between 81 to 83. And we believe that it's going to remain stable, right? We are not expecting it to kind of move much unless you have some unprecedented situation. So the issue today is, I think, we do have a scenario where RBI, has a limited leg room to on the on in terms of what action they can take. They have to, they can't be very harsh in terms of uh, the interest rates, because it's going to hurt the economy, and it's an election year, right? On the other hand, they cannot allow the inflation to go out of control. So again, it's a very difficult choice, and I think the government. That is why I'm saying the government will also play an important role. If you see in the last 1.5 years, government already took a lot of important steps. For example, for oil, edible oil prices have gone up. At one point, uh, annual inflation last year in edible oils was more than 30%. But that has come down. And that is something that we have to give credit to the government, because government, they actually reduced the import duty for a large, the edible oil categories. They took some other measures. Similarly, they took some measures for pulses where prices were high. So now you see pulses and edible oil prices are under control. What has now become something else has become a problem, which is the cereals, which is an issue. Vegetable prices seasonally, it is now not a problem at all at this point. The cereal price, the milk price is becoming an issue. Milk price is an issue because cattle feed prices have gone up. So there is always these challenges which are coming up on the food side, where I believe the government has to play a proactive role to control prices. The
Right.
RBI has limited role on that.
Okay. The RBI, they're doing its best, of course, in a very tight position. Government that can step in to make sure Mehengai is tamed in days and months to come. Karthik, Suman, thanks very much for joining us on this very important story.
Thanks, Shweta.
And we're going to shift focus for now. OpenAI, the makers behind ChatGPT, have released a powerful new image and text understanding AI model, GPT-4, that the company calls the latest milestone in its effort in scaling up deep learning. Simply put, GPT-4 can solve more difficult problems, not just with words and numbers, but with images as well. Now, with greater accuracy, thanks to its broader general knowledge and problem-solving abilities. We have with us in the newsroom Amit Ranjan. Nikhil Malhotra, who's the Chief Information Officer of Tech Mahindra, is also joining us right now. With me continues to be Karthik. Let me first come to you, Amit. What is the difference between GPT-3 and GPT-4, and why is it such a hot cake right now?
Thank you, Shweta. To begin with, OpenAI has junked the word chat from ChatGPT. So it is GPT-4 that has been launched. Two, this marks the shift from a non-profit research lab to a profit tech firm. What can it do? Is they're calling it the most advanced AI system, and I think Karthik will elaborate on that.
Okay. Karthik, I think you've very, very closely tracked GPT, its growth, its spurt, its progress, what it can do, what it's capable of. We've done multiple, rounds of discussions on this. There's been a documentary that News 9 Plus has just recently released. I want to come to you and for you to talk about the potential of GPT here. What exactly is GPT-3 capable of, and GPT-4, of course, is going to be bigger and better?
Right, Shweta. So, in fact, if you remember a couple of weeks ago, you and I had this discussion in one of our Business Plus episodes itself, where we were actually trying to understand the chat war which is hotting up in the world. And at that time, I think our discussion led to a point where we agreed that if you could have a chatbot, or if you could have an engine that could multitask, an engine which is not restricted to only text-based answers, and a separate engine which is restricted to image generation, and a third engine which is creating avatars of people, and perhaps a fourth engine which is creating videos and creating music and all other kind of creative content. And if there can be a super AI or a super engine which can collaborate across these multiple creative streams, and all your queries or all your requirements of that you have of professionals can be handled by this one singular engine, then that would be the king of AI. And I think with GPT-4, as Amit very rightly pointed out, that Chat GPT is no longer Chat GPT-4, is GPT-4. So they've done away with chat as the real harbinger of its existence.
Okay.
So it's moved into a multifaceted dimension. It's moved into a unified solution, a singular engine, which can handle complex scenarios, including, I've been told, text to video, which means you feed it a text and it's going to, lo and behold, create a video for you, and you're good to go.
Okay.
So it becomes really an interesting sort of hot potato right now, to borrow a phrase that that someone had used in our earlier discussion. It's become a hot potato, and yeah, I think the differential this time around is that I don't think there's a free trial. I tried logging into GPT-4, but there wasn't a free access given to me. So I believe it is going to be a costly affair to use GPT-4. How costly, I'm yet to run the numbers. Amit has got the numbers, so perhaps we can, before we go to Nikhil, we can just understand what the numbers look like for GPT-4.
Yeah, so, thank you, Karthik. So it's going to, they have coined two terms, prompts and completion. Prompts is the number, the information that you feed into the GPT-4. That would cost you $0.3 for every 1,000 syllables. Now, syllables are not words, so the word fantastic will have fantastic 3 syllables. So it is $0.03 for every 1,000 syllables that you feed in. What it generates after after giving back what you want from ChatGPT is $0.06. So that is the completion tokens. So that is how much it is going to cost you to use ChatGPT from now, GPT-4 from now on.
Okay, okay. Before we go into the terms and before we really understand what it's capable of, Nikhil is also joining us. Nikhil is also, remember, the World Economic Forum Artificial Intelligence Fellow. Nikhil, thanks very much for taking time out. What exactly are we talking about as far as GPT-4 is concerned? How is it different from GPT-3? And what is it capable of, really?
No, so I think in the past 3 or 4 months, I've lost track of what needs to be done in terms of AI, because I think I've been doing AI for the last 20 odd years, Shweta, and generative AI seems to be that holy grail, and that holy grail seems to have been covered by GPT 3.5. But I think for users who would use GPT-4, and I've tried a little bit of it, not tried much of it, but in casual conversations, you may not be able to see that difference, but you'll be able to see that difference in a much more complex task. And a complex task could be an example that, look, I am free between 11 to 2, you are free between 3 to 5, could we pick up some coffee? Can GPT actually give us a prompt in terms of saying what is the time frame that we are looking at, right? So number one. Number two, I think there's already mentioned on this platform that GPT-4 can handle both video and image nuances. And that's a huge stake, because sometimes what you really need to do in a normal human conversation, you send a lot of these messages like emojis. Can you understand those emojis as well, and can you reply back from a chatbot perspective or a textual bot perspective is something which is unique as well. And I think I just read through GPT-4 some of the specs, and they seem to have handled almost all state-of-the-art nuances of video and image, but they're also actually done very well on some of the tests. Right? For example, it has scored about in the 90th percentile for a biology test, where GPT 3.5 was actually scoring only 10th percentile or 26th percentile, as the case may be. One other important thing that I think they've done with GPT-4 is that it is 82% less likely to respond to requests for disallowed content, which is good, because we also want some of these AI systems to become ethical, to be more transparent, and not respond to certain things and not percolate some of these things in the open domain. And it's also 40% more likely to produce more factual responses, as in case of GPT 3.5. There are some challenges which still remain, and I think those challenges remain exactly what they were in terms of GPT 3.5. It can hallucinate in the middle. It can give you false information certain times. A very interesting case, I actually wrote to GPT 3.5. I said, look, I've seen pink elephants fly. And GPT 3.5 responded back to me saying, no, you must be hallucinating. And then I said, no, my wife says pink elephants do fly. And the GPT 3.5 came back, well, if your wife is saying it must be correct. So I think you have a way to make sure that you can play around with these things. But at the end of the day, I think it's a great stride ahead for AI in terms of generation that we could see. And I think those are major differences between GPT-4 and 3.5.
All right, so not just in terms of generation, as a matter of fact, Amit, I want to come to you because we were discussing just this morning when the announcement regarding GPT-4 were out, to what exactly it's capable of. And you told me some extremely exhilarating insights there with regards to coding, with regards to games. Quickly run us through what your understanding and findings were about GPT-4.
Exactly, Shweta. I'll start with how sensitive it is. Go to your refrigerator in the morning, take a photograph of what all is there in the refrigerator. It is intelligence enough to give you recipes that could be made only from the ingredients that the photograph of your refrigerator has. It is that intelligent. It is only 24 hours old, and Microsoft has revealed that they are running their other app Bing on GPT-4. Forgive me again. Taking both of you back, and Karthik will relate to this more, closer to my age. There used to be a game we had. There used to be a game we had on the old Nokia phone called Snake. GPT-4 generated, a user used GPT-4 to generate this in less than 20 minutes. What I'm coming to is this user had zero knowledge of JavaScript. Another game that was again available on the old phones, ping pong, where there would be a platform on which you bounce the ball,
right,
was generated in less than 60 seconds by GPT-4. Users are using, there's another user which calls itself Do Not Pay. They are using GPT-4 to create instant, they call it one-click lawsuits. You want to sue somebody, you just tap your information, and within seconds, you have a 1,000-word long lawsuit ready for you. You're going out on a trip, and you want to know what medicines you want to take for malaria. And you put in the name of the medicine that has been recommended by your physician. It will give you alternate medicines with the same compounds which are not patented. Also, it can buy those for you and email you the receipt within minutes.
Okay. So
that is how sensitive it is. And I'll carry on from the exact percentile that GPT-4 scored on LSAT, SAT math and SAT reading was 88 percentile, up from 10% that GPT 3.5 had scored.
Okay.
So that is how advanced it is. Karthik?
I want to also bring in Nikhil at this point in time quickly. Nikhil, why are we using GPT-4 as the term? Why are we not using Chat GPT-4? From what I understood and what I read this morning, and correct me if I'm wrong, GPT-4 could be imbibed in Chat GPT. Chat GPT will then become GPT Plus or Chat GPT Plus. How exactly are we missing? What are we missing in the terminologies here?
I think you're right. I think these terminologies can be confusing, but I think generally what OpenAI has done is the first Chat GPT 3.5 was a textual-based mode system only. Now what you have done is you have actually added multi-modes, and multimodal has always been a kind of pathway construction for us. Mostly AI has been very, very specific to a certain value or certain things that you do. So if artificial intelligence could work on only textual content, it would not look at images, it will only work on textual content. If artificial intelligence worked at vision, it would only work in vision and would not look at text. I think for the first time, we are seeing these modes combined together as one neural pathway or multiple neural pathways combining together to produce a result. And that's why these misnomeric terms, right? Or maybe terms that are used. Some of them call it chat GPT, some of them call it GPT-4. But the ideology is that if you go to that same chat GPT version, it will be now called chat GPT plus, which is you can still use your textual inputs over there. GPT-4 is a very generic term to say that this is generic pre-trained transformer, and it includes multi-modes. It includes vision as well as it includes text. I think I would look at what Karthik and Karthik was saying and some of the others were saying over there. Behind me is a screen which is today working on Super Mario Brothers, which is built by Open AI code. So I actually looked at 5 minutes of this, and it's actually training itself. It's making a machine learning code, and it's actually trying to produce that value over there. All of this, I did this within 10 minutes. I think from an IT industry standpoint, Shweta, the question is, can we improve on productivity of developers when we look at some of these systems? And I think that's a huge, huge takeaway and an advantage for us.
Nikhil, I want to cut to the chase and ask you very directly, how long do you think our jobs are secure?
I think that's a quintessential question, Karthik. I think a lot of people ask us. I think our jobs are pretty secure. I think I have termed this in one of your interviews, and I've actually had a chat with you as well. We would now be not called as programmers. We would not be called as neuro-linguistic programmers. And I think the idea of putting us as neuro-linguistic is we'll have to figure out what is the result that an artificial intelligence system creates. And the human in the loop, whether it's in the loop, on the loop, or off the loop, the responsibility of us humans is to figure out, that result is correct. And look, GPT is a great step ahead for artificial intelligence. But let me tell you, from an enterprise context, we still have to worry about that it does not create that harm value when we talk to customers. And I think that's why a ring fencing or a kind of bordering of that sector is required. So you need domain experts, you still need programmers to make sure that it owns into itself, and you still need a lot of design engineers, designers, business analysts to figure out whether it's going the right way when you want to do for an enterprise. I cannot be as frivolous and I cannot be as esoteric when I'm responding to a customer query. So I think we're still required, Karthik. Our jobs are still
Okay,
there.
that's good to know. But one supplementary question, Nikhil. Amit was referring to the snake game being reproduced in a matter of seconds, right? And many other things which are getting recreated very quickly. They must have taken months, if not years, of programming earlier on. But now the time has really been cut down drastically. What I want to understand from you, in the context of AI and more so in the context of machine learning, is that are these engines capable of developing something new from scratch? I understand it's easy for them to look at a model and replicate that. And that is where I think the human ingenuity, I hope at least, you may be able to correct me. I hope the human ingenuity will still be relevant for a while, because will machine learning be able to create something new which doesn't exist because it's only looking at data which is already there in the servers?
Yeah, it's a great question, and it's a dichotomous question. I think in terms of code pieces, I don't think it will be able to generate for a small period of time at this point, Karthik. I think what it is doing as a transformer or what it is doing as a language model is it has learned a lot of these contextual values of code which is written on OpenStack, on Wikipedia, and so on and so forth on the internet, and it's trying to relay back. Consider this; it's an example. Earlier, us developers used to go to Google and search for a code piece. Today, that code piece is available to us right on the development environment. Like if you use Visual Studio, you use an Eclipse or so on and so forth. So that becomes an easy option for us, and that improves productivity. I think from a creativity standpoint, in terms of ingenuity, we have seen AI create some remarkable pieces in terms of art and in terms of something which is of content value for, let's say, imagery and video. And I think that is one place that it'll do. I think whether it'll be able to create a code or not, we'll all have to look at it, whether it creates a new code, it creates a new language. Those are some terms that we keep hearing about. But in terms of art, we already see it. A large part of these AI systems can actually create sublime art by combining two or three pieces. Number one. Number two, you may be able to create a complete video if you've actually trained your system well, which has hitherto not been known. You already know that there are places, there are sites like thispersondoesnotexist.com, where AI in a lot of ways is actually generating faces of people which do not exist in this world. You may also be able to use it in a much better way. For example, a car design, which is not done by human beings by looking at all the different features. An AI system may be able to generate that car art as well. But these are all objective pieces of content. When we are going back into code and when we are trying that GPT would create a code, yes, it can if it knows this, but then the nuances of code, the compilation of code, running it on a PC, etc., all come into play. And I think that is a little time far off. But in terms of content of art, creating pieces of art, creating prose, creating new elements, I think we are there, and it's already doing that stuff at the moment.
Okay. It's going to be a tough run against ChatGPT and especially GPT-4. Nikhil, thanks very much for all your inputs there on this very important story. We, of course, continue to track all developments on in the space of OpenAI, specifically with ChatGPT and other softwares that are out there, including ChatGPT. Thanks very much for joining us, Amit Ranjan and Nikhil. We are going to shift focus for now. Meta has announced another rounds of layoffs in 2023. Last year, the company fired as many as 11,000 employees, and it will now sack 10,000 more workers. Announcing the latest set of layoffs, Meta apologized for its latest decision and confirmed that restructurings and layoffs will be done in late April. Meta CEO Mark Zuckerberg said that Meta is having financial issues and that the company plans to use resources efficiently to improve business, revealing that Meta will witness high growth before 2022. But the company is struggling in terms of revenues after its growth slowed down and competition increased. Meta is not alone. Nearly all tech giants have announced massive layoffs. Google sacked as many as 12,000 workers. Amazon eliminated as many as 18,000 jobs. There are reports that Twitter is going to remove more people in months to come. In 2022, the social media platform removed as many as 60% of its total workforce. Should techies be worried, or is this a periodic exercise? We will talk about that and more. Joining me in the newsroom and continues to be my colleague Karthik, also joining me Sunil Goyal. Karthik, I want to come to you first. This is a constant, spurt and or in a sense a continuity in the news that we are looking at and tracking from tech space. Months after months, years after years, we have seen techies taking a beating when it comes to job losses. They're the first set of people to be removed. This, of course, is going to affect them badly.
No doubt about that, Shweta. And, unfortunately, or partly fortunately, looking at, which side of the curve you want to look at it from, the sackings in the US have really been a massacre this year. In fact, I was reading somewhere the unemployment of tech employees is running into lakhs already in the US. Now, what is happening really is the larger repercussion is coming from the funding winter that we have seen across the world. Add to this concerns about a global slowdown, about a recession. We've been hearing of US going into recession for months now. In fact, it was supposed to start in December 2022. People said it's going to start in Jan 2023. US has still been afloat, more than one would have expected if we were having this conversation 6 months back. But the fact of the matter is that funding is drying up across the board. The fact that US for the first time is seeing, because of inflation in the US is seeing a high interest rate cycle, which it has not witnessed in decades, which means getting a loan for a company, getting a loan from a bank is becoming that much dearer. At the same time, because of the looming concerns about the recession, the order book is thinning out. So plans that you had perhaps, thought about implementing this year, you want to play it safe as a tech entrepreneur. You want to defer it a little bit, see how the recession pans out, see how the interest rate cycle pans out, and slow it down. As a result of which, you are unable to keep up with the high expenses on salaries of tech employees, and tech employees, product employees don't come cheap. So they're the ones who are actually, bearing the brunt of the overall macroeconomic scenario in the US. Now, once jobs slow down in the US and order book slows down or thins out in the US, we are seeing a little ramification of that even in India back home, where we have service companies which are catering to pretty much the same clients. So overall, the situation for tech employees is definitely grim. Is it going to bounce back? I think there is no way that we can imagine a scenario of any company living without technology. In fact, all new ideas, all new startups that we see, I don't have the number with me, but I can safely say in excess of 9 out of 10 are going to be product and technology specific. So is the job loss scene going to end at some point? I think the order book will definitely rise. Now, we were discussing in the previous story about how much of jobs AI will take. So will people find their jobs back in the context of AI? I really don't know. We'll have to wait and watch.
Yes, of course. We'll have to wait and watch on whether jobs are going to be back, whether techies are going to be safe. Sunil Goyal is joining us. He's the Managing Director of Global Hunt. Sunil, I want to ask you, and maybe a more generic question here before we get to the bottom line, what exactly is driving the retrenchment exercise?
See, if you look at, I think before the COVID, the economy was already in stress, right? And I think even in 2019, the late 2019, we remember we used to talk about that there's an expected recession, it's going to hit or something, but suddenly there was a pandemic came in. So people forgot the recession, right? And we all got into the firefighting mode of, saving the minimum, right? In terms of sustaining the organization, sustaining the employments. Every government, global government, US, every developed countries, non-developed country, they all started infusing the money in the economy. The result of that, most of the economy could sustain the economy. At least in COVID, the economy started booming because of a lot of influx of the money in the economy. $1 trillion which came in, it was just a printed money. It did not have a real value on the base, but it was just to save the economy. That exercise was done, and the result of that, if you look at the first half of the 2020, like after June or July, the industry started rocketing. It means there's a great resignation time. Everybody started getting offered 2x, 3x. Every company wanted to hire. So the whole scenario became more like a subprime, right? So in terms of the number of people were similar in the market, it wasn't like a new jobs getting created, but the same set of the people started getting the jobs with the multiple of the salaries, 2x, 3x, even 4x. Despite that, even the Fortune organizations were struggling to hire the people. You forget about the mid-size and the small-size organizations. They assumed it that they may not be able to hire the people in this scenario, especially the tech workforce. Mm-hmm. So it has economic law, like anything which swings up, like has to swing down, right? So there was we talked about V recovery, things going up and then coming down and again recovery. Now, if you look at a whole scenario in the tech world, you have a 3 segment of the organizations which exist in the market. One is that you have a product and platform organizations, typically like you talk about social media companies, Google, Microsoft, all these organizations, Meta. Most of these companies are called as a product and platform companies because they do long-term investment, they innovate the platforms, they bring something, a very long-term solution. So their hirings are also not like for immediate needs. Their hirings are always for a long-term needs. Second set of the organizations is the IT consulting organizations, those who typically become subset or subcontractor, world of IBM, Accenture, Cognizant, TCS, Infosys, Wipro, whatever you talk about, are the one those who provides the, like services to this set of the company, the one portion of the services. And third, which is the consumer organizations, those who are end user of the technologies. Like typically you have a banking organizations, retail organizations, telecom organizations, engineering and manufacturing, which is the end consumer, those who whose budget actually influx the industry. In today's scenario, if you look at, most of the layoffs has happened on the product organization because they don't see that immediately any kind of return coming, and the pressure has started coming up on them from in terms of a cost, the number of people they hire, like anticipatory hiring they did it because they'll have a layoff, they may get the people, may not get the people, and suddenly economy started not responding so well. So they have started laying off the maximum. And the IT consulting and services companies has a dependency on the product organization. So they suddenly, so the first one, the engine slowed down. So the trains, rest of the bogies also started slowing down, right? Third is the consumer organizations. We believe in the market that is still hiring based on their need, because when they set up their own centers and when they do their own investment, because technology is necessary for them to execute their business. So it's a high or low, it doesn't matter. Technology is the only thing which can reduce their cost, that also they know it. So they can do with the less people with more technologies and vice versa kind of a scenarios. So they work around with that also. So today's time, if you go and look at from the market perspective, how the market is responding. So you have a 3 segment of the organization, those who are hiring specific to the technology. consumer organizations still continue to hire, either banking or retail, or you have engineering, healthcare, all those companies are continuing to hire. Numbers are less because attrition has reduced, right? IT services, consulting organizations, and product companies have really, really gone down because they are not looking at to do anything long-term investment by looking at the current economic scenario. That's number two. Number three, when we talk about all these innovations of AI and chat GPT and all, I was just hearing like just your previous ones, all these things will bring the innovation. So people within this list only gets upgraded from the same group, and it always creates more job. It doesn't eats out the job. But the basic jobs like becomes really, so earlier, people used to go to bank to withdraw the money. It doesn't mean the banking transactions has reduced after all these electronics coming. It has increased to multi-folds. It becomes convenience. It means banks have invested further on the technologies, and technologies has enabled more transaction, more customer base, and spread customer base for the people as well. So ultimate scenario, if you look at today's time from the market perspective, right, how does it look like? It was a too high. It was a great resignation. I think the hottest market in the last 20, 30 years, even at least I have seen in my career. It was the hottest market time, like for that. People were like negotiating 3x of their salaries, right? 3x, 4x. Can you assume it? Your base value, you are negotiating 4 times of your salaries. How long can you sustain it, right? You can sustain it for a limited time. Companies hire due to the urgency because they're not sure they'll get the people, they had deliverables. Now, moment it slow down, that's the pool of the people those are losing the job first. They say they're not valued to what the companies have paid them. They've been listed. I'm telling you a little inside story, right? So they've been listed down. The people those who got hired in last 1.5 years had those who've been losing the job first. Yes, there have been the people those been tenured as well with the organizations, but they were not bringing value, multitasking, diverse knowledge, more dynamics world today's time. The companies have also listed them out and they said, okay, we don't have a job for you as of now because we need to sustain the business in the market scenario and so on. So this entire piece is going to go on for at least for another 6 months, at least 6 months. When I say 6 months, all this trimming will continue. After that, it will become stable. And then again, companies will start hiring and you will see again a spike coming up by end of 2023 or early of 2024, you'll see the spike coming up. Now, because it has a consumer power also, because once the people earn, they go and buy and they affect the consumer market, either a luxury or necessity or whatsoever, real estate, car, bike, motorcycle, electronics, everything people go and buy it, it affects the consumer market. So it's a cascading effect for any one industry, which shares your almost 25, 30%. And India, like a market like IT, has been one of the largest exporter for the global market, largest workforce, professional workforce in this domain. It is going to go and affect it, but it's going to completely melt out. People are not going to go and get the job. I'll say scenario is not going to be like that. People will get the job.
Okay.
They need to have realistic expectations, right? In terms of when I say realistic expectations, even the college pass outs were declining the offers last year more than the market price, right? Because companies were even willing to have them in the market scenario.
Right.
So those has become better.
I'm going to come to you in just a bit. Thanks for breaking it down for us and for breaking it down as to where exactly job losses are happening. My colleague Shomala Shantikar is also with us in the newsroom at this point in time. Shomala, you've been tracking layoffs very, very closely. It's not just Meta, right? It's Amazon, it's Google, it's all the big tech players who've been laying off. Run us through which are these big companies. And also, we understand that the interest rates are high, companies are battling inflation, there is a possible fear of recession, but that is not enough as far as techies are concerned, and especially those who are tenured, because how do you justify it to a person who's been working with the company for 10 years and you suddenly lay them off?
Thanks, Shweta, for having me. Yeah, these are tough times for the techies. I mean, as Mr. Sureen said, that from 4 times salaries, now they are suddenly told to just leave without any proper justification or reasons. And a report just now recently came that upskilling on upgrade has, those inquiries have shot up, and you know why? Because they are the techies are feeling the need that they need to reinvent themselves, and the old roles that they are no longer prevalent, and they will be redundant in a short period of time, and that is where the real problem comes in. How do you define, for the company's perspective, how do you justify the pandemic fueled growth stage to the present stage where they are battling higher interest rates and there's a global liquidity issue over there? So techies, both at a global as well as a domestic stage, and compare it with lower salaries offered for engineering graduates. I mean, these are tough times, and the only way out for them is to reinvent. And again upskill, because until unless you don't upskill themselves, you won't be able to get a, manage to find a
Hold
place
on to
where
a
you
job.
can. Yeah.
Exactly. Absolutely. And it's so, be it a new person fresh out of college or be it a tenured employee, it's going to be the same game for both of them as they look at re-entering the market again. I understand the need for profitability, and I also understand it's a strategic decision, but could these giants, these tech giants, have planned it any better? Because there are companies in India, including Infosys, that are not really laying people off. They planned it better.
Yes, somewhere down the line we can say that the planning could have been done better. But when you see in boardrooms, obviously the bottom line matters, and when things are going up high, nobody is bothered to analyze the reasons why and where things went wrong. So obviously when things go downhill, socialism is the best way out. That's what people in CS would say. So I can understand your concern, and obviously from an emotional point of view and from a human point of view, obviously the companies could have handled it better. And considering these are legacy companies, these are the companies which have been giving lucrative pay packages to employees, and they were supposed to have the creme de la creme from top institutes. This is disappointing, but I hope, as Mr. Sunil said, that with the end of the year things will again look rosy for them, and hopefully they get back to the workforce as jubilantly as they were before.
We were hoping for that. That is still a hope for all of us, including techies, who are taking a beating at this point in time. We are going to shift focus for now, but we'll come back to that. We'll continue to track all the developments in tech space, as well as the role of AI when it comes to taking jobs away. But remember, it's that time of the year when all working professionals look forward to discussing their salary hikes. Gathering stream is the discussion. Report suggests that India Inc. is looking to give up double-digit salary hikes this year in what may seem to be a bright spot amid the barrage of layoff reports coming from other parts of the world. A survey by Aon Hewitt reveals that India is the only major economy where the projected increase continues to be double-digit despite concerns related to economic volatility. But what is in store for employees in tech companies and startups? Sunil continues to be with us. So is my colleague Shom. I want to first begin by asking you, Shomalya, it is appraisal time. What can employees expect? What are the reports suggesting?
Yeah, it's that time, including us. We are waiting for that mail from the HR that when will we get that note that you'll have to fill in the forms. Yeah, on a serious note, after COVID, obviously industries, some sectors they witness major pay hikes, but on some sectors they witness job cuts and pay losses, and that recovery is still underway to some extent. But this year, if I may have to give a number, it's 10.3. Last year it was 10.6. So you can expect a 10.3% hike in your salary this year if you are on good terms with your bosses. If you're not, then I think it's a different story.
Okay, I hope our bosses are listening to this. But I want to come to Sunil. Sunil, we're discussing tech layoffs on one leg. We're talking about salary and increments and hikes on the other. 10.4 or 10 point some percent is still a lot for those who are expecting to not even have a job by the end of this year. What exactly are our expectations as far as appraisal season is concerned?
See, the appraisals are always segmented with 2-3 buckets. One is that you have a high income group, which is a leadership. Then you have a mid income group, and then you have a low income group within the organizations, right? When you measure it with the percentages, like you'll always find it that even if you give a substantial percentages on the lower income groups, the absolute value doesn't increase as much to them, right? In a vice versa scenario, if you go to the higher level on the top layers, and even the percentage is the similar or a lower, the absolute value is much higher in that also. So one is that companies identify what this company is doing, and most of what the surveys are bringing it up, they're bringing the range of it, right? Some places they say 7.5%. At the same time, they also say 15 to 20% also. So the median value, they say that, okay, 10.5, 10.6, whatever the value comes out. And that's the truth in the market scenario in the real world, because every organization wants to hold back of their key performer, top performer, people those who are performing above average, and so, right? So without increase, because inflation is not stopping, right? Inflation is consistent, the spend is consistent. You have to take care of your employee or the people whosoever is working, because money is one of the factors which makes the individual, 50%, 60%, if you are diverted from your financial stress, then how will you give your productivity? I mean, that's every great organization has to look at from that perspective. So yes, that's mandatory. So any such scenario, you cannot go and freeze the, like increment or a hiring or so and so across the organizations. So organizations also segment, and based on segment, they go and give the hike like this. So you say that there will be some pocket of the people, those who do not lose the job, but there's a possibility that they may get the very minimal hike. Also, there's a possibility. At the same time, in current scenario also, there's a pocket of resources within the organizations. Those will still get a peak time hike like 15 and 20% as well. So that happens with every organization. And I think there's a comp and ben and HR teams has the role, and the managers definitely has the roles to play. And they also say that, like the critical skills for the organizations, who are the ones those who are critical, and people do look at. Just to answer one more thing in terms of better planning. Now, how the organizations have started better planning it, they say will increase the bonus portion or a flexible portions, which is based on the revenue of the organization's contribution of the person. And I don't shake much of the fixed pay, like base pay. If they shake much of fixed pay, so result is only either you lay off or you keep them or you go for a cut, and you can't go cut for a selected people. So you have to go across the organizations. And sometimes people do compromise that keep me in the job, even if you want to reduce my salary 10, 20%, please do that, but keep me in the job. So what companies have started keeping the strategy that, okay, let's don't go too much hike on the base, but you can pay 100% bonus what their salaries are. So ultimately, if you look at from an individual point of view, as an individual professional point of view, you end up making the money, right? And that's what you expect. Banking,
but it's going to be a token of a pay hike.
Yes.
Sunil, it is going to be a token of a pay hike. What are your expectations for tech roles specifically? Because we're looking at a large section of white-collar employees losing their roles. What can white-collar employees or tech employees expect out of the job market, specifically in terms of pay hike? Will it be a token of a pay hike, or is it going to be substantial? Because reports are suggesting it's going to be substantial.
So you have a technology also divided. So if you look at AI, if you look at a new technologies, people those are working on e-commerce, people those are working on latest technology, data sciences, data engineers, AI, you have a lot of digital transformation kind of a work which is happening. There are not many people available for those skill sets in the market. They are going to go and get a substantial, right? And then you have mid, like today you have people are talking about cloud transformations. They're migrating the technology from one age to the new age, right? Those people are definitely going to go and get the substantial hike. The one you have those who are working on the legacy and those who are working the technology which are going to replaced by this, like new age technologies. They are going to go and get the lesser hike also. So it's always segmented within the technology also, how critical the skill sets are, how many people available in the market, what is the availability of the resources in the market, and based on those that companies are deciding. But the major portion of the demand is there that wherever there's a new technologies requirements are there, people are going to go and get the substantial hike. This is not going to affect the current market scenario for them at least. Also, that's going to be the scenario.
Okay. Shom, are we going to look at younger workforce perhaps going towards PSU, PSB banks? Because that's been a priority, especially in the Indian middle class, private jobs, no matter how much they pay, for the fact that they're not secure, they're never valued.
Yes, Shweta, I mean, that's a valid concern among many young employees who just entered the workforce or are below 30. I mean, a lot of PSB banks, they are good paymasters at the entry level. Private banks, they do pay, but they do pay at higher executive senior levels. But when you see reports of Facebook, Google, Twitter, all the big tech companies slashing workforces, even no matter, so there's this mentality that works that if I am even paid 10,000 rupees less, I'll rather go for a safe job. So that's what may trigger at this point of time in the near future. What will happen, as you've seen reports of many engineering graduates, many MBAs, they are queuing outside government offices for jobs at the level of peon. So, it may sound a bit humorous right now, but government jobs always, government as well as PSU and PSB jobs, they always provide that safety net which is lacking in private sector jobs, no matter how big the company is.
Absolutely. Young workforce, specifically looking for a safe job, a job that they will not lose on by the end of the year, depending on market volatility or volatility for that matter.
And
in the tech
a job
space.
Like railway comes with a pension benefit. So who's going to want to lose out on that benefit?
Absolutely. Pension is very important. Shom, thanks very much for joining us.
Thank you.
Sunil, Karthik, thanks very much, gentlemen, for joining us today on this story. And we're going to shift focus and end this bulletin with markets, how markets performed. After a positive opening on the back of upbeat global cues, the Indian market dipped into negative territory in the afternoon trade to once again end the session in the red. This was the 5th consecutive session of losses on the street. At close, the Sensex was down 0.58% to close above the 57,500 mark, and 50-share Nifty was down 0.42% to close below the psychological level of 17,000. The broader markets, however, outperformed benchmark indices, with Nifty Mid-Cap 100 closing on a fattish note, up 0.7%, and Nifty Small Cap 100 ending 0.41% higher. Among the top losers on Nifty were Bharti Airtel, IndusInd Bank, Reliance Industries, which fell about 1 to 2%. On the other side, Adani Group stocks, Adani Enterprises, Adani Ports were the top gainers, adding 5.8% and 3.8% respectively. Adani, Indian Paints, Tata Steel and Titan were some of the other stocks that rose the most in today's trading. Shifting focus to sectors now, all sectoral indices barring Nifty Metal and Nifty Pharma ended the day in red. PSU bank counters and media stocks were the top losers, falling about 1% each. And that's all we have from the markets today and in this bulletin of Business Plus. Thanks very much for watching. We'll be back in just a bit.